Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, October 26th. Okay, we've got a bunch of headline-driven red numbers across the board. It's about 6:10 as I start the video. Our broad market indexes are all off about 1%, which is near the lows of the overnight session. We've got the DAX in Germany down 2.5%, 2.75%. We've got Corona going wild everywhere. Europe is reporting biggest caseload yet, and we here in the States have basically the same issue, rising case counts. And also the market is putting together that there's not going to be a stimulus deal. I think all this stuff last week, we're talking, was just a saving face routine that nobody wanted to say. They were the ones that were walking away. And, you know, now we're Monday morning, we're a week away from the election. Nothing is getting done, and the market is putting all that together. But headlines aside, we're more interested in the price action and what we can do as far as our trading. So let's take a look at the key levels again, kind of refresh ourselves and get ready to see if we have any trading ops today. So starting with the SPY 2-hour, a common theme this morning is price being brought back to support. So on Friday, we finished at the top of the box. This morning, in the case of SPY, it's set to open around 342. Now, that in and of itself may be an opportunity for trades. Let me tell you why. So we're going to have a gap above up to almost 346 from wherever we open. They're going to go down and tag this 341.50. I'm almost sure of it. I mean, we're going to open very close to there. Anything north or higher from 341.50, you can still be long. Why? Because this is the below 341.50 is your prior trading range, and we got to stay above that. So it would be very objective to try and get long right in this 341.50, 342 area, and then hope for a gap fill back up towards 346. That would be a nice trade to start the day. The key is setting your stop just below, and if they take you out, they take you out. I mean, that's active trading. Get long at support and sell resistance. What we may see this whole week is just toggling, you know, back and forth inside the range, waiting for a catalyst, be it the election or some other catalyst, to either break us out above 346 or break us down below 341.50. And we're just going to have to wait and see how that plays out. On the 30-minute chart, you can see that exploded trading range a lot better. We'll open down in this area, most likely at 9:30, and then we'll have this big gap overhead to fill, which, you know, you got to assume they're going to fill it at some point. And I think they go up and fill it before, regardless of whether they take it down or not. I think they go back up and try and fill that gap sometime today. And remember, as I'm offering these hypotheses, these scenarios, that's all they are. Um, one possibility. And you've always got to have the possibility that that traders or investors get scared and they want to get out and they break this support area. So you can decide if you want to try a long here or just kind of let the day play out and then pick your spot later in the day, or even just step aside today if you're not comfortable with the ranges. But as we left it Friday, we had PPO and RSI rising. Those won't turn on a dime this morning, even with the drop. So as long as we hold that 341.50, we're fine. There's no big technical event. It's no different than this tag or this tag of the level. And you can see in both these cases, it resulted in moves back up to the top of the box. So if you were to get long here, that's what you're gunning for, a move back up to the top of the box. And that's, that's $4. That's a nice trade. Same thing with the Qs. We closed at the top of the box on Friday. We're set to open around 282. A break below 282 would favor a move to 280. Now remember, let's compare and contrast where we're at on both of the indexes. SPY has already done its complete back test of the breakout. It broke out at 341.50 and now it has come back to test that. Qs have not done that. Well, here was one long needle tag where it went down and touched in there. But if this came down to 280, it would be in the same exact posture as SPY. And remember what I was saying last week is that if you're trading SPY or QQQ, always look to the other one, the one you're not trading, for a price confirmation. So for instance, SPY breaks down below 341.50. If the Qs are still above 280, you don't have the price confirmation that the Qs have broken down along with SPY. And what usually happens is if the Qs find support, say at 280, and start to bounce, SPY will probably bounce with it, and then you could get that whipsaw signal in SPY. So whenever you're dealing with the indexes at a critical level, always try to get confirmation from the other one that either a breakdown or a breakout has been confirmed by the other index. Here's the 30-minute chart. We're going to open down here around 282. If that were to break, then down here to 280, and then we'll have to reassess if that holds or if that breaks. IWM is set to open right down around 160. That's your bull bear pivot. Anything above 160 keeps the chart productive. Anything below 160 favors a move back down to this gap at 158.50. And then, of course, a move into the gap would favor a gap fill down to 156.75. Here's the 30-minute look. Price will open down here, and then you can get long there for a bounce and a gap fill, or if it breaks down, look for a move down to 58.50. So the posture of all the indexes are that they're going to open near support with relatively large gaps above that will need to get filled at some point. Last week I promised to go over the daily charts of the FANG names, and I'd like to do that right now. Facebook broke out on the Snap earnings here and then had a couple days of consolidation and then moved higher. I think your overhead resistance is at 295. Okay, your first target is 295, and I think you can stay long against 273.20, and that value should be familiar to you. That's off the 60-minute chart. That was a pivot point. So anything above 273.20 is bullish with an eye on 295. And if we drop below, then this gap comes into play. Let me see if I can pull that up for you. Here we go. Here's the gap, 276.30. If price comes back down here and then breaks that level, you're looking most likely at a gap fill, at least down to this trend line. Let's move on to Apple. Pre-market, it's trading right at 113. You've got the 50 EMA at 114. I think the 50 EMA is the key. If it can hold the 50 EMA at 114, I think you can stay long for Apple. But it has been weak, and I think if it loses that 113 level off the 60-minute chart, I think you're going to come back down here to 110 would be my first target, and 107.50 would be my second target. We'll just have to see if there's any kind of risk appetite this week to do anything with Apple in front of earnings other than selling. So 113 to me is your daily pivot. Anything above is okay. Anything below is bearish. Tesla. On the daily chart, it has spent quite a bit of time between 450 and 390. 390 is where actually I've got the 50 EMA at 402. I think if you got to move down to either the 50 at 402 or 390, I think that would be a good place to try an objective long, because below 390 there's a big void here. I think you're going to 330. So that to me is a mega level, 390. Anything below that, I think you got to get short and look for 330. As long as it holds, your target is back up at the top of the box at 450. So we'll have to see how that plays out. Microsoft, your daily pivot is at 215. Anything north of 215, I think you can be long, looking for a run back up to the highs. Your first resistance point will be 222.50 right here, and then your second target will be 230, 235. If you drop below 215, you've got the 50 coming in here at 211. If it loses that, then you're back down to, 204.50 and possibly 196.50, depending on what's going on in the market. Amazon, it's really got to recapture this 32.60 to get on the right side of the chart. Right now it's sitting right on the 50. If you lose that, then very good chance that it comes back down here into this 29.50 level. If you're actively trading it, go off the 60-minute chart or even lower time frames. Those $50 increments have been working like a champ. Between 3,200 and 31.50, down to 3,100, down to 30.50, etc. Those have been working really, really well. So if you're working off of shorter time frames, all those levels have been working great. If you're working off the daily, I think to get long, I think you got to take out this 32.60 to get back on the right side of the chart, and then look for a push towards 3,500 and then 3,600. Earnings for Amazon are on Thursday. Google's been doing really well. Came off this tag of the 200 and has put in a bull flag and broken out. If price can clear 16.50, then you got to open door towards the prior high at like 17.20, and then higher up towards 17.75. So this is one of the stronger charts in the FANG complex. Wrapping up with Netflix. 3 visits to the top of the box and 3 visits to the bottom of the box. So that is well defined. Down here at 490, I don't think you have a trade until you get down to 470. And if it looks like that's going to hold, that's your objective long, with a target back up at 560. That's a great trade location to try along, with your stop just below in case there's an overshoot or just more selling pressure. Now, on a break below 470, from a technical standpoint, it would be a short. But keep in mind, you've got the 200 here that's coming in at 450. You start getting lateral support here at 440 and 410, and then you get an open void down below. I think that's going to be a tougher trade. I think there's going to be a lot of little support areas that are going to hold up, the progress of a short. Not saying you can't make money. All I'm saying is you might see a lot of intermediate bounces at all these different support levels that have the potential for making it a frustrating trade. So I think 470 is a real interesting location, and that's a location where I think, unless you just think the whole thing's going to fall apart, that's your objective long, where price has proven to hold multiple times in the past, and you keep buying support and selling resistance till it doesn't work. And anybody that's been doing that has made a lot of money. That's a wide range, 470 to 560. That's $90. that's nice trading. Okay, sent out a bunch of trade ideas yesterday, 10 setups. We've got other setups from late last week that are still active. I think we've got plenty of names that we can trade this week just out of those ideas. Of course, there will be other ones that pop up along the way. Earnings are going to generate a lot of gaps, I have a feeling, this week. I think this week is about keeping everything in balance ahead of the election. I think there's going to be a lot of volatility, and I think, for me at least, it's not a time to go out there with a million positions. Stay nimble. Certainly do your intraday trading, as you see fit. That volatility can be a real bonanza for good traders during the day. But if you're trading on the daily time frame, stick with what you got. Don't be looking to do too much this week. I think this week could be a real heartbreaker with fake outs in both directions. So just kind of relax, let the market play out the way it's going to play out, and then we'll see. One thing you could do is find value names, find value setups, regional banks, junk stocks, the cruise lines, the restaurants, anything, consumer discretionary value names that have been beaten up. Look for setups in those areas, because when that stimulus bill gets announced, those are going to start to move, I have a feeling. And we may not get that till February, but once the election passes, I think there's going to be more chatter about it, and there may be a lot of front running, especially if there's a blue wave that they can spend as much as they want, kind of thing. I've heard numbers between 4 and 6 trillion is what they want to spend if they win, and that will be just an incredible amount of liquidity that will juice the markets. But we won't know that possibly for a couple weeks on how the election all pans out. So I think now is a time to chill a little bit, take your shots in context with the other stuff that you've got going on, and then have all your ducks in a row as far as the value trade goes. And I think we'll know a lot about big cap tech after all the big boys report this week. Also, it wouldn't be a bad idea to watch your high-flying Momo names, because what's good for value is going to be bad for Momo, and there should be some attractive short setups on those high flyers if money starts really coming out of those quickly on rising rate environment and rotation to cyclicals and value. Okay, that about sets the stage for this morning. We've got about 3 hours to the open. I hope you found the information helpful and starting to think about and set up your day. If you're new to the channel, please subscribe, hit the alarm bell to get all my content. Over in the show notes, you'll see links to the blog site where you'll find a lot of helpful information for aspiring traders, and a place to register for all my content. That way you'll get everything I publish sent directly to your email box. It makes everything convenient. And as a bonus, you'll get a link to our trading room where you can either participate during the day, or if you are working during the day, you can come in after hours and scroll and find topics and meet traders after hours. There's usually something going on all the time, so I always encourage people to just register and go in there and find ideas and build your trading network. So have a good morning of trading. I'll certainly talk to you midday if I see anything worth noting. And we'll talk to you next time. This has been Chris Buss with Traders Profit Compass. Talk to you later.